Good evening and welcome to the Australian Stock Market Show. Now, the All Ordinaries Index, as expected, was down last week.
We did write that, anytime a market breaks through new all-time highs, there is that potential for the short-term sellers because it is moving into unknown territory.
So will that continue into this week? Stay tuned as we'll discuss our thoughts on that shortly. We'll also take a look at major world markets, and for our main topic in tonight's show, we get into what stocks we believe will be cheap after the market corrects. First up, we'll share our hot stock tip for the week, so sit back and relax. Again, tonight is jam-packed as we have lots of emails to answer. We'll also take your phone calls and give you the answers to some of the important questions around the market. Tonight we're excited to share our thoughts on some great stocks like BOQ, Zip, NST, the world markets, and more so get comfortable as we'll head into those soon. I'm Dale Gillham, your host for tonight, and joining me are two of our team of highly experienced analysts and professional traders, Janine Cox and Philip Totevsky. And together, we're Australia's most trusted stock market educators. Good evening, team. How are you?
Fantastic. And yourself?
I'm super fantastic, and I'll get
Glad
better.
to hear that.
How are you, Phil?
I'm fantastic as well.
And I'm looking forward to a great night. The market's looking exciting. So tonight, as mentioned, we're going to get into major world markets. But first, let's take a look at this week's hot stock tip. Phil, I know you've got something great for us tonight. What is it?
I sure do. The hot stock tip for tonight is Bank of Queensland, ASX code BOQ. So let's get straight into it now. On your screen is the marketindex.com. And Bank of Queensland, as the name suggests, is a bank, is a second-tier bank engaged mainly in retail banking, leasing, finance and insurance products. It operates two segments of the business. It has successfully acquired a portfolio of brands, part of its multi-brand strategy. And some statistics on this one, to date, 2024 has a return of 2.55% positive, which is beating it's just positive. The 1 year return is minus 3.48, which is better than the sector, which is minus 25%, and also beating the ASX 200 on a 1 year performance. So that's quite nice. Market cap of 4 billion, and it is ranked within the top 200, just outside the 100. So it is a stock known to most people. And if we bring up the chart right now, you'll see we've got the monthly on the left and the weekly on the right. And look, what caught my eye or caught my attention with Bank of Queensland was, and I've got it written down here so I don't forget, is the 7% dividend yield this stock's paying.
That's pretty good.
It is. Now, the sector average is 2%. They're paying a 7% yield. And I know a few weeks ago we spoke about companies trying to entice investors with paying nice dividends. And perhaps Bank of Queensland is one of those stocks. But what's really nice about it is that if you look at the chart, on the monthly chart here, you'll see that the price action is also giving us really good indications to get excited. You'll see I've got this rectangle box which basically showing you around the $5 to $6 range where price has really been, for the most of its life, it's always found a way back to this $5, $6 level. And what's quite exciting for the stock now is that we are here in October, November, if we can zoom out a little, was the most recent time we've touched the $5, $6 mark. I've also marked some price projections, and why I've marked these is when you look at these price charts, what's really nice is when you see price repeating, Janine, and you see these repeatable patterns. And we've seen since the all-time high, price come back around 68% and then make a little move up before pulling back almost near to where I've got the low down here in February 2009 before making a nice little run up. Now, moving forward, you can see that price has pretty much done exactly the same thing. It's fallen from the high in April 2015, come up and pretty much retraced back to this low in April 2020, which is why I've got these two dots here, each time being slightly higher. And we've also marked this momentum line here where the stock's broken out and given us more indication of this repeating price nature. And you can see clearly that right now we're breaking through this line. March has been quite nice if I zoom in a little bit more. And to me, if it is going to continue repeating this price action, then people could start to get excited about this one. What do you think, Janine?
It looks nice, doesn't it? I mean, the last few months it's held up really well, so I agree with you there. And I like the dots for just something different on the chart there. You're trying to spice it up a bit there, were you?
Yeah, I thought, the more visual we can be, the better, and it's easier to talk to them.
It makes everybody see something different, doesn't it? Now, in terms of what you pointed out, I like the fact that you've got those two lows roughly about the same distance apart. Question is, where will it go to? And, it's got potential to get to around $7 or $8 by the look of that, I think. So that fits in line with what you were saying. But it'd be interesting actually to get a measure and see how far it rose each time when it came up, after the big falls there. So, you've got 68%, but how far did it rise when it came off those bottoms? It looks very similar there too.
Yeah, and I mean the important part is that, if it was to rise, you'd expect it to take out these lows like before. So I think, as long as it goes up, it's plenty of room in there for it.
Nice.
Well, that is it for our weekly hot stock tip. Now shortly, we're going to get into our topic for the night, which is all about the best cheap metals and copper mining stocks. But before we do, right now is your opportunity to get involved in the show and have your questions answered. Now remember, we do prioritise phone calls, so call now on 0392909988, or you can text your question to the number on your screen. Now the first caller into the show right now gets a free copy of my book, Accelerate Your Wealth. So pick up your phone and dial 0392909988. Now while you do that, tonight we'll give you our thoughts on the major world markets. So let's get into it.
On your screen right now is a watch list of the major world markets. Now we can see at the top, obviously the Nikkei has been the strongest. We've talked about that in recent weeks. Market below that, of course, is the S&P 500 index, up 8.52. I thought I'd focus on what's happening in the US markets first. And the Nasdaq's up around 8.27. So we've seen some interesting movements there in stock prices of recent weeks. The CAC is actually up 8%. So there's a lot of markets that are moving up in similar fashions, but one of the ones that's very different at the moment is the FTSE has been, outnumbered basically by these strong movements. The Hang Seng index also is down 2.3%. So most of the markets are up so far for the year, which is interesting, except for these two markets. So I thought perhaps we could have a look at the FTSE 100 and see what the FTSE's up to at the moment. And we'll just switch to that. Now, the FTSE, obviously Brexit caused lots of problems there, but the FTSE really hasn't done much in recent years because of that. And it's been very choppy. If you look at this, you would think that, this is a stock you probably wouldn't want to trade.
No.
It's just so volatile and up and down, and it hasn't even taken out, well, it sort of just took out that high prior to COVID, but it's just gone sideways again.
Well, you're right, it's really stalling. Normally when you like to see stocks break out or indexes break out, you want to see them go on with it. We know they can retrace and you see, some short-term profit taking perhaps, but from then on you want to see a move to continue the run up, and we're not really getting this with the FTSE. It's really stalling, and it's interesting because the UK, it's not a small player in world economics and finance, and to see it's France up, Germany up, way more than the UK. It's odd, a little concerning. Yeah.
Well, look, I mean, our market
since Brexit hasn't really.
Yeah. Our market went to a new high now, and looking at what's happening here, this sideways move, perhaps it's actually delayed and it's going to take off now. But any move to the downside below that July low in 2023, I'd be saying would be watching out. If it takes off above this month's high, then I'd think it could be up to a new high.
Yeah, and it almost gives it away. This chart pretty much looks like our market over the last years before it made its move up, and the S&P before it made its move before our market. So if the FTSE is going to be the last to make a run, and the rest of the world, like we've been talking about, the run's going to finish in the next couple of years, it doesn't tell me that there's going to be too much of a run in it. They might just be too late to the party.
Yeah, I think you're right.
Look, I'm with you guys on what's going on with the UK market, and it's probably a bit of they're sorting out their market really, because obviously with all the conjecture about separating from the rest of Europe and all their the goods and services going in and out of Europe and into the UK and vice versa and that sort of stuff. So it's not surprising we're seeing that bit of a stagnant market at the moment, but it could be like a Jack in the Box being wound up ready to go pop all of a sudden.
Well, the chart does look like that. I mean, it very much resembles the Aussie market before it did make its recent pop out. So it is from a technical perspective, if we take away all the fundamentals around it and the news, if we just look at it purely from a technical perspective, I actually like the setup if it is going to break out. And if it does break out higher, then there is the chance, given that whole congestion around this level here. I mean, it's the best part of, what are we talking, almost 2022 December to 2024. We're talking almost a year and a half, and I'm not very good at maths, so that could be wrong, but over 12 months of congestion, which on the end of that, you could see a really nice run out.
Well, there you go. Phil's a great trader, but he's not good at maths. But anyway, that is our thoughts on the world markets. And before we get into our first email, remember, to get your questions answered live on air, you will need to text into the show or call us on 039290 9988. Now, you can also send your questions in advance to info@wealthwithin.com.au and we'll answer them in next week's show. Now, let's get into our first question for the night. Our first email is from David, who says, "Hi Dale, Janine and Phil. I'm a relative newcomer to investing and trading, having read your 2 books and started trading in the past 6 months. Thank you for your advice in the books. It has certainly led to good profitability in that time, though I suspect the recent market rally hasn't hurt my cause. I enjoy trading in the short to medium term, generally in the ASX 51 to 300. I'd appreciate it if you could assess Zipco, noting that it is slightly outside my normal plan of trading in the ASX top 300. After a long-term basing pattern, it has recently rallied and is now at $1.28. It is well off its all-time high, which was over $14 in early 2021. Some recent broker upgrades should lead to some tailwinds for the stock, but I'd appreciate your thoughts and analysis. Much appreciated. PS, as an avid ultra marathon runner, I enjoy listening to the interviews on talkingwealth.com, particularly with Jeff Link, while out on long trail runs. Keep up the good work, David." So, David.
Big plus for Talking Wealth there.
Well, it is. I mean, you know, if you're out, well, what better thing to do is shove your headphones on and listen to some amazing interviews like Jeff Link. He's a really, really good active advisor, and some of the stuff that we talk about with Jeff is pretty cool, isn't it?
Yeah, and some of the people listen to it in their cars, which is fantastic.
Well, they do. Now, on to Zip. Now, obviously, somebody who's read my book, one thing that concerns me is he's been doing it for 6 months, and yes, he's been doing it in the bull market because we had a low in October, so that's 5 months. So he's doing well because of that. I don't want him to get that sort of false sense of I'm really good at this. And I don't think he's by the sound of it, but you know what I mean? People get that lift and they go, I'm doing okay. But he's trading 51 out to 300, whereas I would say he should be
trading top 50.
In the top 50, not in the 51 to 300. That's my thoughts. But have a look at, do you want to have a look at
Yeah, sure.
Zip?
So look, if we bring up the chart on the, we've got the monthly on the left, weekly on the right, and I actually don't mind this company. Obviously, it's had a really long, prolonged downtrend since the low in February 2021. Pretty much dropping more than 90%. But following that fall, what's quite interesting is that, you know, this company was a bit of a darling a little while ago. I had all my friends saying zip, 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 zip. And
FOMO.
Well, it was one of the most talked about stocks, wasn't it? And a lot of the broker sites as well.
Afterpay was there as well, doing the same thing.
Yep. And I mean, look, just going back to the chart, you'll see that there was in July 2022, we'll bring up the monthly chart just so everyone can see a bit better. In July 2022, there would have been some people really thinking that, okay, perhaps
it's about to take
perhaps
off.
the lows in. It went up at about 300 odd %. And we all, you know, we've constantly spoken about these FOMO trades where people are trying to buy the bottom, buy the dip, and you know we're always talking about waiting for that confirmation. And I think now you're starting to get some signs of that confirmation because it's based out since July 2022 when we've had, even in short term, we've had almost 1, 2, 3, 4, 5. So let's say 5 or 6 months down versus 1, 2, 3, 4, 5. Now 7 months continuously going up, which we haven't had throughout this whole down move. And what's really nice about the move up, it's actually expanding. Each bar is getting bigger and bigger. So that's telling me there's more and more action as price keeps going higher. I don't...
Do you think it could repeat the sort of ranges that we've seen in the past for Zip? Because that's the important thing, isn't it? I mean, if it's going to make a decent move, when is it going to make it and how fast? Yeah.
Well, I mean, this stock is, if you want to talk about hot and what people remember, this stock, if it starts taking off, it's going to be on the...
You'll get them all.
They'll come back, so it could happen quickly.
Yeah. One last thing quickly, broker recommendations. Is that a positive or negative?
Positive if you go the other way. No, I'm just joking.
Well, that's what he said. Broker upgrades are likely to push it. No, don't. It doesn't work that way. No, when brokers are heavily pushing things, that generally means it's probably going to go the opposite way. But anyway, we now have a text from Daryl, who's asking us to take a look at AGL. He says, looking at an aggressive entry at trade through $9.16, a stop loss at $8.20, the recent low. Regards, Daryl. So what about AGL?
That's an interesting statement, just saying, looking at an aggressive entry. I mean, why do you think he's saying that? This would be the first thing
You're looking at the
I'm
chart.
asking. I know, but I'm just looking at the chart and I'm thinking, is it an aggressive entry, I guess, first of all? Well, yes, it probably is, given the nature of the stock. But it all depends on how he's trading. Is he trading short term?
Well, we don't know.
Yeah,
and
we
why
don't
would
know
you
some of
take
the
an
details.
aggressive entry? Because the sound of that to me sounds like, well, it's higher risk. So why would you knowingly take higher risk?
Yeah.
If you don't need to, you know what I mean? So what do
We
you
don't
reckon?
know if he's back tested.
Have a look at his.
Yeah.
I mean, he hasn't. He said he's broken through that level or some level at 9.16.
Yeah,
so
9.6. So I've marked on the charts. We've got AGL here. I've marked up 9.16 in the black. And what was the stop loss again? It was
eight. I can't
820.
820. It is 820. The recent low.
The recent low. Okay, 820. So in terms of it being an aggressive entry, sure, I can understand that. You've seen the stock falling since August 2023. We still haven't had a green bar on the monthly chart. In terms of what we like to look at technically, we're not seeing things yet. I mean, this could just be a slight reaction to another prolonged down move. So I agree. I like the fact that he's calling it a high-risk entry. At least he's acknowledging that.
But is there? I mean, we teach people to trade on confirmation, not speculation.
Well,
so is this one of those entries?
This is
Could be.
speculation.
There
It's a
could be an
speculation.
entry there if you look a bit closer. So, you know, if he's got some rules there, and there may be, by the time it goes through that level, those rules may trigger. So I'm not knocking the fact that he's got rules. If he's got a short-term trade and then he moves his stop up, there's probably no real issue there.
Okay. Perfectly. All right, well, if you do want to talk to the team here, remember, dial 03 for Melbourne 9290 9988. Perfect night to give us a call. We're all fired up, ready to help you and answer your questions. So please pick up your phone and give us a call now on 03 9290 9988. Now we have an email from Jacob who asks, "Hi team, I hope you're doing well. I was wondering if you could please look at the ticker symbol SSM, ACA Service Stream. I recently purchased it on the 3rd of March this year at $1.24 using a breakout from a consolidation pattern. My evidence to take the trade was as follows. Price closed above a downtrend line in February 2023. Price moved up to find support and closed above prior resistance of $1.08, and the next big resistance level is at $2.47. Would like to know your thoughts. Kind regards, Jacob." All right, Janine?
Interesting. When I looked at this, I go, whoa, you know, in my mind, I wanted to say it out loud, but obviously that wouldn't have been appropriate. But
what?
It looks fantastic, the trade that he's taken. The consolidation, beautifully, patience was required. He's waited for the right entry, and it's above $1 by the time it's triggered. It's just ticking a whole lot of boxes for me. Why didn't I see this one?
Oh my God, I was about to ask that. Why didn't you see that one and why didn't you tell
and that's
me?
the liquidity. So obviously if you look at the volume at the bottom, the volume histogram there, it's very patchy. And so this is telling you that this is high risk also. And have a look at, the reason for this is if you look at the downside here, so there's a bar there, 25% in 1 week. So that's the sort of thing, while the upside can be great, now to me it's about protecting that profit that's in there and looking at ways to do that. So that's really up to the individual.
Yeah,
Phil?
Look, I love it. Love the entry. It's obviously coming out of that significant low of December, January 2023. If we zoom out, that prolonged down move it's had since the all-time high, and it's given us one of those, you know, how we like to see the basing out pattern and a nice curl up rather than it be sharp action. We saw gusto to the move up, and it tested lows. It did all the right things. He found a very nice pattern in the process and took it on the breakout, was patient enough to wait for it to show him direction. fantastic.
So what should he do with his stop loss? Like, is he? I mean, obviously it's shot off like a rocket. Have we got any?
Look, I
for
just
him?
wait for it to pull back, form a short-term trough, and
Yep.
then I'd be given the speed of this sort of rise, I'd be trailing it up under that.
Yep. Okay. All right. Any last words, Phil? I know you're just about ready to say
We're
something.
looking at each other.
That's all right. I don't know. Maybe we're just doing a metaphorical
Dance.
dance or something. I don't know. Well, that is it for our take on a service stream. Now for tonight's topic, we'll show you how to buy low and spot cheap stocks in real bull market corrections, which could make you 20% plus. Now we'll also cover precious metals, gold and silver stocks, and some interesting copper miners, so stay tuned. Now you often hear people saying buy low, sell high, but what does this actually mean? Now in my experience, most traders get this concept wrong, which ends up costing them a lot of money. Now the main reason they get it wrong is because they don't understand the difference between a correction and a crash. They also do not truly understand what is a low and what is a high. So let me ask you, Janine, what is a market correction and where do crashes occur?
Okay, so before I tell you what I think, let me tell you what Westpac has to say on this. Now, if the market falls 10 to 20%, this is deemed a correction. But if the market falls more than 20%, they call it a bear market or a crash.
Okay, so what Westpac are telling us is that I should be selling when I hear the market is down 10 or 20%.
Well, no. What's interesting is this. While a bear market occurs with negative investor sentiment, a market correction is often a temporary price reversal before the market continues moving upwards. What you need to know is that often the market will turn and rise after the media declares a market correction has occurred. Dale, when do you see most crashes occurring?
Well, crashes don't occur at the top, do they, really?
That's right.
They more occur at the bottom. And
When
so the
people are
crash
not
is already
expecting it.
underway before we even hear about the crash. And the biggest moves are generally in that second half of the whole crash. But they also occur after euphoric buying. So it's when everybody's jumping in the market, and we've seen this with 87, we saw it with the GFC, we've seen it lots of others. So it's when everybody's looking the other way, thinking the market's going on forever, that it's going to crash from that. But now before we go to the charts, we know that for every seller there's a buyer. So when a correction is declared by the media or banks, who is typically buying or selling these, or at this point, Phil?
Well, like you just said, it's typically the retail end of the market selling at the bottom, and it's the institutional end or the smart money buying at the bottom. And it speaks to the fear and greed that the inexperienced trader, when they see a market falling, they sell most often at the wrong time. And I mean, we've even got quantitative data to support this kind of stuff. And for our Talking Wealth viewers, we'll get into some charts, some cool charts that will actually show when the majority of the retail market sells at the wrong time, and institutional buying and all that kind of stuff. So stay tuned.
Well, we're going to record that in early next week, aren't we?
We are, for Talking Wealth, yes.
And we're actually going to give our forecast on when the stock market's going to crash, what we think and how it's going to unfold and everything else. But to see the video, you have to be a Talking Wealth subscriber. And you can get a free 7-day subscription if you like. Head over to talkingwealth.com but Phil and I are going to record that next week for our members anyway. Now, if you've been watching this show, you will know that I have been saying that the next correction is close. So now we want to look at some examples of crashes and corrections. So Janine, can you bring up some examples for us?
I can do that. First up is the All Ords.
Now with this, obviously it's important. Like, I want to say to people before you have a look at it, it is so critical people get this right now, because the next 3 or 4 months is so crucial to people of whether they're going to make money this year or not. That's
exactly.
my thinking. So
It's not just now though, it's actually into the next couple of years. So obviously with these big bull runs, if you think about what happened prior to 87 and what happened prior to the GFC, we had these little mini corrections. There was all this heralding about that there was going to be a crash, but then everybody seemed to forget about it, and the market eventually peaked when all the people who had never bought into the market were buying, and the cycle repeats.
I think the next 2 years will make or lose a fortune for people. So do you want, which chart have we got now?
Well, we've got the All Ords here, and I just thought it would be really good to show some of these little corrections and compare them to the crashes, the biggest crashes that we looked at. So first of all, let's just have a look at what happened in the GFC and in the lead up to it. So you can see here we had a 55% correction in the GFC, And then prior to that, there were these little mini corrections. So the market would go down for maybe a month and a half, 2 months. This one I think's about a month and a half, month and a half, month and a half. You know, it's that fair consistency of that sort of movement happening, and that's what we've got to think about. So the question right now is the market going to go down just for a month and a half, or are we going to see a bit more of a correction come in, like some of these ones here? We saw 23.8%. This was when the tsunami hit. So there's got to be sort of an emotional event that actually causes more of a wave in the market for these bigger ones to come in. So here we had the Royal Commission, and we've had the tsunami, Royal Commission, but other than that, the corrections tend to be a lot smaller. You can see the one I've got here, 7.5%. There was one in 2013, 11.5%, and that was all before COVID, the COVID correction. The one in December 2018, that was actually 15.5%. So, you know, I'm just looking at this and thinking, okay, what is going to come out? Because everything's died off about the talk about inflation that's subsided to a large extent. Yep. Interest rate conversations have sort of settled to a degree. So, you've been talking about it. It's going to be somewhere in the order of 10 to 8 to 12, or possibly,
it could go up to 15.
But it could go up to 15. But then we have seen crashes, as we saw on the chart.
That's the short-term one. The longer-term one's going to be a massive one. It'll be 50%.
Yeah. So that's not for a few years.
And Bitcoin's going to crash very soon. That's my prediction anyway. But very soon we're going to look at 6 stocks that could make 20%. But before we do that, let me ask the viewers at home, do you think the market is going into a correction? If so, then now's the perfect time to share this video with your family and friends and on social media. Also post your comments on what your thoughts are at the end of the show. We'd love to hear them. So post them below this video. Okay, now stock time, Janine. You promised to find cheap stocks that can rise 20% plus. What have you got for us tonight?
Well, I did promise that, and today I want to focus on stocks in the base metals sector like copper, which have fallen to important levels. But gold is at an all-time high, and silver looks interesting too. Phil, you've got some research on this, don't you?
Yeah, I do. Look, turns out JP Morgan agrees with you, Janine. They recently stated, we have the highest conviction on a bullish medium-term forecast for both gold and silver over the course of 2024 and into the first half of 2025.
Yeah, I think Goldman just follows Janine anyway. Well, that is interesting. Well, what about copper though?
Well, according to CNBC, copper's headed for a price spurt over the next 2 years as mining supply disruptions coincide with higher demand for the metal.
All right, so what is important now is whether we agree with those statements. So let's go to the charts and see what we get. Yeah.
I'm excited. So first of all, let's just have a look at some of these metals and see what's going on. Now, this is actually a chart of the gold futures you can see on the screen there. The monthly chart, we've seen gold go to a new all-time high. Now, if we go back and have a look at gold's history, and it's really important to do this, you can see that gold just hasn't gone up in a straight line. In fact, you know, if we go back to the 70s, it was more or less just choppy and sideways. So this is, to me, a whole new era for gold. And once a stock or market goes to a new all-time high like this, it just could keep going. So you see here when the GFC peak occurred, look how far gold went following that high there. It actually took off and we were up 80%. So that's a bull market movement. If we're expecting a bull market now, we could expect similar sorts of things. Now, we are, you know, for to go 30%, which is quite possible, we could see gold over the next couple of years make another 30% on top of this. I'd say 2,600 points is realistic for gold, but you know, to punch the lights out, that'd be an 80% gain would be nice. I'm not suggesting that right now, but I think, you know, somewhere around 20 and 30% is realistic.
So what about, I mean, obviously gold has a relationship with interest rates and CPI, doesn't it? So if interest rates and CPI both coming down over the next year, you're suggesting that gold's still going to keep going?
Well, look, you don't know, you probably do know what's going to happen.
What did she say, Phil? What did she say?
I just have a lot of you.
But look, nobody has a crystal ball to know exactly the direction of
every
single commodity. I don't want to go there. But we know that in a bull market, most things are going to rise to the top. You know, gold will tend to follow the market up. as we've seen, because we did a show not long ago about how gold actually did track with the market and not take a contrarian position like a lot of people thought it would generally over time.
it does.
Which
That's what
surprised people.
I found that interesting because there was a period a few years back where people thought, that gold was obviously going to be that flight to safety when things started getting a bit hairy.
And it didn't.
And it didn't. It didn't move when people thought it moved, and now it's going up, and it seems like, we're past COVID, and obviously there are wars going on at the moment, but it seems like things are settling down, inflation's coming down, so it's very interesting.
Well, would you like to have a look at silver?
Well, that was exactly what I was going to say. What about silver? Because we know silver lags gold. After gold's taken off, then silver will slowly go. But silver's much more of a commodity we use rather than store. Obviously gold, we make rings and stuff out of it, but silver we use in industrial applications as well.
Well, see, they say that the traders push silver more so than they do gold, but the chart's actually showing the opposite.
So let's have a look at the chart of silver.
Yeah, so you can see here, to me, this is actually an opportunity, and like you just said, Dale, often it can actually lag what's happening on gold, and I think this is about what we're about to see. We've just seen this month, this really nice move up in silver, so it to me is an opportune time here to be watching this. And I'm just going to draw my line across the tops here. So, it's possible that silver could break out of there and break through these highs. So I'd be really watching this right now.
Oh yeah, and the way it's setting up right now, ideally you'd want to see it get through at least on the safe side around that $29, $30 mark. If you can get through there, then I think it's bound for some good rises.
So I should convince my wife to buy silver jewellery rather than
You won't
gold.
have a chance.
I don't have a chance anyway. She just buys it.
All right, so how about we look at copper and take a look at what's happening?
That was exactly what I was going to ask you next. How about we look at copper, because copper is it's used in everything.
Exactly.
From cars to computers to everything. So I think
your phone,
it's a phone, like wires, you name it. It's just high demand all the time.
Yep.
So obviously, if the world's going to expand and come out of recession, like the US is theoretically in a recession, the only reason we're not in one is because of immigration. So if China starts coming up and everything else, I think there's going to be a lot of demand for copper, isn't there?
Oh, I think so. If people keep building houses, definitely.
Well, that's true too. So
All right.
how about we look at copper?
All right, let's do that. So I've got the monthly and the weekly chart there, but I'll just quickly flick to that monthly chart and we'll come back to the weekly. This also, like silver, to me looks really interesting. Similar sort of movements going on there with like silver being a more industrial type metal, and so far it hasn't taken out that high there in January 2023, but this monthly move is pretty damn convincing, and if it can stay up above $4, then I think we're really going to just go gangbusters on copper over time, but it has to stay above there. Any move back below this month's bar, and then I'd be saying it's going the other way, but I'm liking it. We did do a show on this some time ago as well, so if you haven't seen that, make sure you check out the history of our shows on copper as well. You can always pick up extra things along the way. So look, that's really copper. I mean, what have you got to say about that? Did you like it?
I'm
excited?
I'm excited about silver and copper more so than gold, because obviously gold's run pretty hard. So to me, I'm with you. I'm thinking look for the opportunities in
gold's
silver
probably
and
the safer option, more defensive. It doesn't move not as volatile as what silver and copper could be.
Correct. But it's also that one that's like, do I buy gold bars? Do I buy gold futures? Do I buy gold ETFs?
Gold
I just keep buying more gold rings and watches? What am I doing?
Yep.
And to me, I'm looking for growth, and I don't think the growth's going to be there in gold as much as what it will be in silver and copper.
Yeah, I'd agree with you on that.
Look at those two. But anyway, now we've got some great stocks that we want to share with you, and I'll make sure that the team will actually tell you what their preferred pick is. So what I'd like you to do is at the end of the show, can you comment below and share whether you agree with us or not? Now let's get into the charts.
All right. Now we have
Janine.
The first stock we've got is gold. Okay. So this might be your favourite, Phil. Northern Star. You like Northern Star, don't you?
Oh look, can I make my choice at the end? Is that
mate,
how this game's going?
Don't let Janine persuade
Because
you.
last time she picked one for me and I didn't really like it, so I'm going to wait till the end this time.
Okay.
But look, getting to the charts, Northern Star, obviously, household name, gold stock, and I actually do like it, to be honest, Janine. It's, coming out of this nice low of July 2022, we saw really, really strong price action, and you can see that it really shot up, particularly November 2022 and December leading on through it. It gave that really nice push. It's had a very nice pullback to around that $10 mark, and now pushing on through. I don't love the fact that it is resisting around this level, because it is some short-term resistance around that 1440, the previous high, April 2023. So if it can get through there, I'm going to love it a lot more. But the fact that it's trending nicely, it's giving us that predictable price action. You're seeing, those higher highs, higher lows. So it's doing all the right things. It's got a bit of a gap here as well, which it could come back to fill, or it could not. Could mean that there's strong buying. I don't mind it.
Okay, shall we look at the next one?
I was going to say, no comment on Janine.
No, I've just passed over it.
You just passed over.
I'll show you why soon.
You're going to tell me why soon. Anyway, so the next one's CMM, I believe.
Okay,
correct. Yep.
CMM. Now, this is a nice little sideways consolidation at the top there, Capricorn Metals.
Yep.
And I just like the fact that, this could be a topping pattern. We don't know yet. We're just waiting to see this, whether it's got really strong support here for the next move up. But a move through that high, and I'd really be liking this, the direction of this one. And it's got the potential to continue to run on. But when it gets trending, it makes these really nice moves. You could see it go up for 5 or 6 months in a row. So, that's what, if it gets back through that high here in 2023, that's what I'd be expecting to see from there. If it falls away and it's struggling to get through the $5 mark, then I'd just let it go, because there's be a risk of it going through that February low.
Yep. Can I jump in
Go
on this
for it.
one? What do you
You
think?
can even contradict her if you like.
Well,
No,
he wants to.
I actually might.
We
I
like
might
a
on
good
this.
argument on the show.
All right, argument time. No, look, the only thing I will say about this one is, given it is at the all-time high, if we just stick to the monthly chart, you'll see that this stock, anytime it makes a new all-time high, it has the propensity to fall away for a little while. It's happened here in August 2020, then shooting through, it's had that period where it's fallen again. And you'll see each time it's breaking through these all-time highs, it's actually breaking through with less gusto. This was a nice run here. This one's a lot less, and potentially this one's going to be an even less, in terms of strength, run through. And the fact that it is at the all-time high, I'm not surprised that we could potentially see some profit taking and price settling back down through here. This sideways pattern is very, very interesting to me also, because on one hand it could come back and find base out around here and then make its next run up, or it could just mean that the last bit of buyings happen, that exhaustion, and we just could see a dump from these levels. So I'm not. Was this your favourite? No.
I'm not revealing anything
okay.
yet.
Revealing,
Yeah,
yeah.
I don't like this one.
Well, I was noticing, if you're looking at what the volume on the other chart that you had up,
Yep.
the volume over the last 2 years has been more than it was prior to that. But the price has been going sideways.
That's right. It's really curious, isn't
So
it?
it's like, that's really interesting. Why is we getting more volume going through, but price is really not going anywhere? Is this just an accumulation phase before it break up? Or is it, like Phil's saying, if it doesn't get through that $5 mark, could it correct more so, because it's really been going sideways?
Yeah, it could.
So what's the next one we got?
So next up we have Sandfire Resources.
Yeah.
Now this one does look good, and you're probably a little late to the party if you are looking at this one, because it's had a fantastic run, particularly since the start of the new year. December, you see, January, February, and March in particular has really shot out. It's had a really nice. Again, we're seeing these consolidation patterns. We keep talking about them over the last couple of months. They're happening, and stocks are breaking to the upside, which is really nice. I do see, if I mark with the horizontal line here, there is a level somewhere around here. Sorry, let me just zoom out and give you guys the whole picture here.
Changes of view, doesn't it?
Before you answer that, because the intention of what this topic tonight is to say how to find these after correction.
Yeah.
So and the reason why we're doing it is because we're expecting in the next 2, 3, 4 weeks, rubber bandish, the market will peak and we'll have a correction of 8, 10, 15%-ish.
Yep.
So we're saying these stocks, these probably will
These
come
stocks have
down.
the potential to recover quickly, and that's the point.
That's what I want to try and make the point is, it's, whilst it's a bit overstretched at the moment, put it on your watch list now, because if it comes back for a couple of weeks, 2, 3, 4 weeks, comes back 10, 15, 20%, then it could be a really good opportunity to make that 20% you're talking about.
And to that point that you're saying, the good thing, particularly with what we've been talking about, how these stocks have, had these nice consolidation periods and then breaking out, it gives you a really, really clear line in the sand to where is a high probability where the stock where they are going to come back to, and
Yes.
where you'd like to see them come back to, because you don't always get that. When you get that really clean price action, you've already got in your mind, okay, if it comes back to a certain level, and as we know technically, if it gets there, it's a really strong sign that it gives it a reason for the next move to be from that point on. So the fact that they are showing this type of price action, it gives everyone out there, if they're looking at the right stocks, it gives you it's almost just like looking at that speed hump and going, all right, I know exactly where it needs to go.
Yeah, but that's also why earlier on in this topic we talked about, people don't know what a top and a bottom is.
Yeah.
They think, oh, that's a peak and that's a trough, or that's a high and that's a low. But what is a significant high? And when we're teaching our students, we talk about isolated highs and significant lows and isolated lows. That's not any high and low, because often you see a stock will move up 2, 4, 3, 5 weeks, come down again, makes a peak, comes down for 2 weeks, makes a trough and goes up again. That's just on a smaller scale, highs and lows. But what we're talking about is there is a significant high coming in the next couple of months, probably more like the next month, and then we're going to have another move down into it, which will create a significant low. And we're going to need to be, and why we're telling you this, is you're going to need to, if you're in your portfolio, you may need to sell pretty quickly, but then you need to be on the other side of it, pulling the trigger to buy pretty quickly to take advantage of it, because the next couple of years is where fortunes will be made and fortunes will be lost for people who are not leading the party but following on and getting FOMO and jumping into the run at the last minute, which Phil was talking about earlier. So that's what we're saying here is these stocks, once they correct a little bit, not all of them, but some of them, if they correct a little bit, they will make the 20% in the rest of this year. So that's what we're talking about.
Yeah, you just see the volatility of something like this shows. If you look at the chart now, you can see these few months up, like through that level that Phil's talking about. So when I was looking at this one, it was actually down here. So it's pretty much shot up all this distance in a week and a half. So that's just an example of why, I picked this one and why I like it. So that's really, Sandfire is really interesting. Yep.
Can we get into your favourite stock now?
It's not my favourite at the moment.
Yes, it is.
No,
BHP
it's definitely not my favourite
stock.
It's definitely not my favourite at the moment.
It's always your favourite stock.
That's what you said, yes.
It is, no.
It's
about 100 times I've heard her say, that's my favourite stock, but it's not today.
Okay, so look, BHP is very disappointing at the moment because it actually broke through that all-time high and then reversed and traded down and took out, all sorts of rules. So, it's from that point of view, it's not my favourite stock right now. It's not looking as nice as what it was when it went through that high. So it's just about waiting though, because this BHP has the potential to take that high out again.
Won't it?
Well,
it
the big
really
stocks eventually have to, but
They
you just
do.
don't know how far they can fall, especially when it makes a topping or pattern like this and it's at an all-time high.
Well, so far this week we've seen Fortescue, we've seen Rio, and I think BHP all up around 3% this week. And we're only on Tuesday.
And I mean, speaking to what we've just been speaking about, seeing that correction happen, BHP has been the leader in it, you know. The materials sector in particular, that it was falling before the rest of the market.
And if the market's got a peak and this has already started falling, we could see some of the biggest corrections in these stocks. So that's the concern. So if we've still got a number of months to go with the fall, we haven't seen the peak, you're saying another couple of weeks to go, and could be a couple of months down, then, if the market's going to fall like that, then BHP, Rio and FMG still have further to go.
Correct. And then that's going to turn them into a bargain.
That's right.
Definitely in a bargain. Any more you want to talk about on BHP?
Oh no, we can get to the next one.
No, I think you need to talk more about it.
It's
favourite stock.
All right. Well, if it is your favourite stock, look, I like the fact, like we've spoken about, if the market is to turn, and this one's already started the process, then you're right, Dale. BHP is obviously the biggest stock on our market, if not the biggest. And it's been in an uptrend since. April 2016, it's been just strongly going up and up and up, and sure, it's reached an all-time high and it's pulling back here, which is not uncommon, but anything back around that $40 mark or even that $35, $36, there's a potential for it to be a very good buying point.
All right, on to the next one, HGO.
All right, HGO. So this one is Hillgrove Resources, so another sort of like a higher risk stock in the mix, and you can see the history of it's really checkered history. So it's not for the faint-hearted, it's not for inexperienced investors, but I just like the fact that there's this line across here. Okay, if the market's going to peak out and go into a low, and then eventually we're going to see a bull market. I'd just be very patiently watching this like a tiger, sitting there ready to pounce. And this could be a good one down the track if it holds up and takes out that line. So Hillgrove is quite interesting. If we go to the weekly chart, we just sort of look at the volatility. The reason this is not for everybody, and it's probably pretty good for short-term traders wanting to be able to make some really good money. So you're talking 70% in just a couple of months even.
You'd have to have some real stellar rules on this.
Yeah, it's some really good rules that you can find to trade it. So it's just a big move up here, 75, 72, 122. And there's a run up there, 88. So, I think it's got opportunity there.
I'm just soaking up the fact that you're looking at a 8-cent stock and doing another side, because you're always giving it to me for looking at it.
That was the big thing for tonight. I thought I would surprise both of you.
But if just looking at that chart, if you're trading a moving average on that, you'd be creamed.
Yeah, because the volatility. The moving average is going to keep you in the middle, and this is obviously it has very volatile swings either way. So. Yes.
All right, last one,
All
GMD.
right, last one. Okay, this one looks interesting. So I'm going to stick with the monthly chart to start with.
Genesis Minerals?
Genesis Minerals, yeah. We look at the whole history of this. This thing's trading just under $2. Look at the line across here. So we just draw a line across these highs here. So it's not the penny stock that we had before, but it is a $2 stock, which is, it's okay, but it's still an issue for a lot of new people to the market. So beginners, it's a no-no for beginners. But looking at those levels there, it's got some serious resistance around these highs. Once it gets through that, look at the all-time highs. So let's just run this up to get an idea for what we've got. Then, you're talking a potential 100%. So there's no argument to me about this. If the market pulls back and then this thing goes through that line, I think it's got huge potential.
Yeah, this is for me one stock, even though it is down at $1, $2. This is one stock. If you just look at the chart, it started as being a very illiquid stock, to then becoming a stock where obviously the bars were a lot tighter in range, to then now increasing the volatility of the bars, but showing you that there is liquidity because there's none of that gapping. So to me, it's positioned right now in its life that it is a stock that can be traded quite well. And look, if this one were to give you another opportunity and pull back to around that dollar level, then this looks exciting.
All right, now, important question. 30 seconds each. Which one's your favourite stock or your pick for the night? Phil.
I'm going to pick this one.
Hey, that's mine.
Why? Why?
Oh, because of the potential and the fact that I like its, as I mentioned, it's changed its character to becoming a lot more liquid. And it is at that $2 level being a stock that is acting like a $12 stock in terms of the liquidity. Well, from what I'm seeing on the bars, obviously we haven't gone on and had a look at the volume, but it looks good to me. I like where it's positioned. I like the pattern that it's made, and it's in an uptrend, so looks good.
I like this one too.
Yeah. How did you both agree?
Well, I probably like 3 out of those, but the last one was my
What was your second choice?
So I left it till last, so I remember what it was.
Your second choice?
My second choice? You go, Phil.
No.
I need time to think about
Phil's
it
had
now.
his first choice. What's your second choice?
I wasn't expecting you to ask me for a second choice.
Northern Star? Do you like
Northern
that?
Star?
I like
No.
Northern Star.
No, that's not my one.
PHP. Definitely not. Sandfire Resources, I think, is probably the second one. I think that would be the second. That would be mine. But I agree with you. So the 3 for 3 for that last stock, I think. That was the pick for me anyway. Well, that is it for our topic for tonight. Now stay with us as we still have got plenty of emails and stocks to go through. But before we get into these, for those watching on YouTube and Facebook, you can watch all of tonight's show plus the members only exclusive content on talkingwealth.com. So head over now and grab your free 7-day trial. Now whilst you are there, you can also watch our Australian stock market report that is released every Monday. Now this is the report where we share our views on the Australian stock market, and each week we give you some great buying opportunities that will pay for your yearly subscription to talkingwealth.com. If that's not enough, you'll also get hundreds of amazing interviews with global industry experts in the stock market, finance, gold, money management, mindset and well-being, fintech and artificial intelligence, business and loads more. This is all on talkingwealth.com. Now moving on, if you want to talk about a stock or ask a question, pick up your phone right now and give us a call on 0392909988. That's 03 for Melbourne, 92909988. Janine would love to talk to you, or you can text the number on your screen. Now, whilst we wait for your call, let's get into our next email. Our next question is from Jane, who says, "Hi guys, I bought Dusk around 80 cents in June last year. I figured it couldn't go any lower. Where do you see it heading from here? Thanks in advance, Jane." Dusk, Phil.
Yes.
Dusk, is that
what's
shop
the
with candles and stuff in it?
It is. I only found out about that today. Janine told me that.
I don't know, I've
they
never
sell
been in. I just
candles.
see it. I just see it in the shopping centres. Dusk, and I go, oh, okay,
Yeah.
whatever. That's where you bring your
Phil's
candles
gonna
out.
buy his
So
wife
that's where
some.
you got to be romantic. You go to the candles
Yeah.
at the dusk shop, and when the sun goes down at dusk, you light them up.
See, I only really thought candles were for, when the electricity runs out, but I guess not. You guys are teaching me something here today.
Yeah, we've been known a long time.
Yeah.
Buy some candles.
Okay.
So what do you think about
Yeah.
the stock?
Look, was it the buy price was in June, I believe?
Yes, June last year.
June last year, and bottom picking is an understatement here, Jane. Sorry. We constantly talk about confirmation, because it not only is it something that you need to look for in terms of your mindset and getting those winning trades in the belt or in the pocket, whichever word you want to use, but it also adds to the bottom dollar, because when we spoke about this on the show on Monday, how many times do we see people trying to pick bottoms, and you might be right 1 out of 10 times, but how's that going to impact your overall portfolio, and over the long term, how's that going to look to your bottom line? It's not going to look great. So it's
I
one
don't
of
like
those.
when people pick their bottoms either.
No.
Even some basic rules with Trading Mentor really could have helped her. So that's what I'd be saying, Jane, is just to get some really basic rules to confirm that the stock's actually starting to go up. That's so important.
That's so critical.
It
It's
didn't
just-
show any
yeah.
sign at that time, did it, of it, that it was actually moving up?
Bottom picking is just really hit and miss. It's like flipping a coin. And even then, how many times you see people bottom pick and the stock just goes sideways or does nothing for years?
Well, look, it was
They
really
turn a good trade into a long-term investment.
Yeah, and it was really important. From what I gathered in that text was because Jane mentioned how much I figured it couldn't go any lower.
Yeah.
And that's the mindset around bottom picking.
Yeah.
A lot of people
You can go
think,
to zero.
because it's gone to 10 cents, it looks cheap in my mind. But what are you basing that on? How are you judging that 10 cents or
Well, yeah.
50 cents is cheap for that stock? So it's
We
a
can't
dangerous.
compare it like you're like getting bargains at the supermarket or something like that. It's just not like that. You can't do it.
Correct.
But if you go back, you could actually see where you might have thought it couldn't go lower, and then it did. So it's already done that.
Yeah. So, no for Jane?
No, definitely not. It can keep going. I mean,
That's a
the
risk
question
right
is,
now, isn't
can
it?
it go lower? Yeah,
It can go lower. All right, now we have a text. This one is from Rick, who says, he was asking our thoughts on MTS or Metcash. Now, Rick also mentioned he bought into Bank of Queensland today, so he is glad we're all on the same page. Regards, Rick. So, look, hey, Rick and you are mates, obviously. You've got a telepathical
I like
connection.
red wine.
He'd already bought the stock. He doesn't need to give you red wine.
Well,
All right,
All right.
MST.
MTS,
Oh,
was it?
MTS, sorry.
Metcash.
Okay, so it's risen
I'm
really
left handed, so I
nicely.
get a bit dyslexic occasionally.
It's hit that $4 level, which is really important. So just looking at the chart across here, it's gone through that level now, which is great. I'd like to see it pull back for a couple of weeks and then start to move up. But I think it's a little bit too early. I'd like to see a real and proper test of that low, possibly come down to about 370 and then take off through that $4 again.
Yeah. Look, for me, I think that it did test. If we bring it up on the weekly chart a bit more, there was a low here in June 2023, which it did come down to test, and I really like the extension out of here. Obviously, you saw the last time it came to these levels, it had about 3 or 4 week rise, whereas this time it's come out much, much stronger. And it's no surprise that given it's come through these highs here, that there is the potential that it is going to come back and settle a little. So now is a good point in time to see how it's going to do that settling. And I agree with you, Janine, if it can come back and settle nicely, creating some higher bases around here, then that would be a good time for me as well to look at getting into this one.
Well, if we start coming out of this the interest rates start easing off towards the end of this year, that would all go well for this stock, wouldn't it?
You would think so.
If at the moment it's probably little bit too early.
Well, we've seen Coles and Woolies get sold off heavily recently, so this one's in that, and they've just been pushing up a little bit, but maybe it's just a sector-driven thing, and when you're looking at the long term on a stock like this, you've just got to consider the volatility, because you'd think a stock like Metcash wouldn't be that volatile, but it actually is.
It is actually volatile anyway, so just be careful with that one. But now we do have a caller on the line. Welcome to the Australian Stock Market Show. Who have I got on the line? Is it Alex?
Yes.
Alex, thanks for calling in. What's your question for us today?
Yeah, g'day, Dale. My question is in regards to AMP.
Mm-hmm.
I was wondering what you guys think about the prospects of this stock going forward. I mean, it's just hit an all-time low, and last month was promising.
Do you own the stock?
It's broken a downtrend. Pardon?
Do you own the stock? Or are you looking to buy?
No, but I'm looking at buying it for a medium to long term.
Okay.
Considering it's in this financial sector, I'm thinking, well, that, with the pull, like we're expecting a pullback, so I'm thinking it would might be a good opportunity and some confirmation.
Yeah. What sort of, are you looking at it technically or fundamentally? Or you just wanting, yeah? Why are you interested in it? Is what I'm asking for you. Yeah.
Yeah, so why I'm interested, I've just been, considering it in this financial sector, I'm thinking it's just been sold down so heavily. I'm thinking, well, could it be an opportunity coming up in this stock on, yeah.
Gotcha. I know AMP is 3 letters, but it's actually a 4-letter word to me, AMP, because it constantly has been disappointing over its whole history, but I'm sure the guys will give you a good answer. Thank you for calling into the show, and if you want to be like Alex, please give us a call, 9290 9988. AMP, Phil, what do you reckon?
Yeah, look,
DOG, or is it a...
well, look, it has been for a long time, and the only last time $4 where in June 2003 was where it came down, and it had a bit of a decent run up to 2007, but obviously we know 03 to 07, the market, obviously we had that nice bull market where most stocks were rising strong. Having that mindset of thinking that how much lower can it go, again, we just spoke about that, can be very, very dangerous, because it's at $1. It's just that $1.30. It can go lower. In terms of price action, if we zoom in here, I would say to you, Alex, it is still in a downtrend. There isn't too much saying that it is going to break through that just as yet, because as you can see, we've had October 2023 and November 2023 be really, really strong down bars, and it's taken the stock 1, 2, 3, now 4 months, and it hasn't gone back up through there. So it's still very early for me. I'll give you a little bit of a tip if we can, and there's a bit of a momentum line here that I would, for starters, like to see it get through these levels here, so above $1.30, $1.40, before I even started looking at it. Not to say that I would be buying it, because you want to see price action become nice and clean and get those higher bases before you thought about this one.
Look, I think, I understand what Alex is thinking, but this is a stock I would stay away like the plague. Unless you're an experienced trader and you've got good rules and you understand all that, I'd stay away from this stock like a plague, because there are far better stocks at the moment to buy.
Yeah, you'd be buying in the top 50 if you don't have knowledge of rules.
So I'd be, for Alex, I really would be getting into the top 50. I know it sounds cheap, but for 20 years people are going, AMP's cheap and buying it, and only for it to fall away.
And how many times has it had false starts in the last couple of years?
So many false starts. So there's so many. It's much easier. I understand the thinking there. It's low and it should go up medium to long term, but the point is when, and you want to take the lowest risk and let somebody else handle that risk. So many other better stocks you could be getting into at the moment, especially in that top 20. So, but thank you for your call. Now we do have another caller on the line, team. Welcome to the Australian Stock Market Show. Who have I got on the line? Is it Sean there?
Yes, it is. Good evening, Dale, Janine and Phil.
Welcome to the show, mate. Thanks for calling in. What's your question for us tonight?
Phil, Dale, I was just interested in your take on Ansell.
Yep.
It's a fairly well-known company. I used to support it in my youth. Unfortunately, that was about 40 years ago.
I'm not going to ask any questions.
I haven't done a lot of... I've looked it up on Market Index. I haven't done a lot of fundamentals on it. I know it's got a PE of 20. It's in the top one, or it's 157th at the moment. But I see it seems to trend really well, and I've done some analysis on it, and except for those major corrections, I mean, it seems to retrace to about 61.8%.
Yep.
And it's currently around or between 50 and 61.8 right now from the long-term trend at the moment, which has gone on for 20-odd years. Interestingly, the volume seems to have halved for some reason. But I was just wondering, my question, I guess, to get to the point, do you think it's going to do what it did back in 1993, or is it a chance to turn now? There's a very strong support there at about $20.
Yep.
And almost a double bottom, except it's in the middle of a trend, I think, not at the bottom. So I guess...
so you're looking to buy, yeah?
I'm not in it, Dale, but yes, I'm interested in it for sure. But I'm just a bit worried it might do what it did in 1993. Otherwise, if it does turn from there, I think it's probably got upwards of $34.80 in it. But
fair comment.
Yeah, and at the moment too, it's still down on a Gann swing. It's still down on the monthly, while it's just turned up on the weekly. But I haven't done much examining of the weekly chart.
Short, medium, long term.
Well, I'm kind of in stocks as long as they allow me to stay in, Dale.
That's a good answer. I love it.
I've listened to you guys for a long, long time, so while it lets me stay there, I'll be in it. But outside of that, I'm probably more medium.
Fantastic. Well, thank you for calling in. We'd love to have you call in another time too. And the guys are ready to have a chat and answer your questions. What do you reckon, Phil?
Look, if we go to the chart here...
Are we going back to 1998, or was it?
Look, I might actually go back to 1998 because it's a really good example to show you that there was a period back around that time where you can see price action look very, very similar. There was a support around, $13 where it looks very similar to what $20 looks like now. And we were coming out of that big low from the then all-time high. So there were opportunities like we see now where it's come back and tested the $13, but look what happened. It didn't go on with it. So the only thing I'd say to you, Sean, is you're looking at a 61.8% retracement, which is great that you've done the work, but you're looking at a retracement in the biggest scheme of things in a bear market, in a downtrend. So you need to be careful that even though it may come up and you may be looking at short-term trades up to about $30, which is fine, just understand that the sentiment here is definitely coming from a negative perspective, just like it was back in 1993. So you do want to see that nice, I'd be more comfortable with seeing from these levels some more nice price action like we're seeing around these 11, 12 areas where you're seeing those consecutive higher highs, just giving you more indication that this isn't just some reaction to the bigger down move.
I'd like to see the monthly turn up, and Alex knows what we're talking about here from that, and I think you'd probably be
I'd agree with that.
You know, but I think I like it. It's interesting to me having a quick look at the chart. So I think you're on the right track, Alex. So well done. Give him 2 thumbs up.
Go for it, Alex.
Do your research, do some back testing on it, and as I said, when the monthly goes up, I think I'd be going with you, mate. Now remember to show your support for our channel and smash that like button. If you do enjoy watching and want to see loads more of our content, click subscribe now and check out all the amazing stock tips we've covered in our previous shows. Subscribing helps others find our channel so that we can help them become better traders and investors. Now before we let you go, what was your favourite part of the show? Was it our thoughts on gold, silver and copper? Or was it Phil's hot stock tip for Bank of Queensland? Let us know by commenting below. Thanks to all of those of you watching on YouTube and Facebook. Now if you're watching on Talking Wealth, stay tuned for more exciting stock picks, insights and strategies. We'll be right back with all that and more. Next week in our main topic, we get into the top 3 cybersecurity stocks to buy, or whether you should buy an ETF. Make sure you join us next Tuesday night at 7 p.m. Australian Eastern Time. If you love the show, remember to hit that like button now and subscribe to our channel, as this shows your support for the team that puts in the effort each and every week into bringing it to you. If you are subscribed, then you'll always know when we go live and we put up new content. As always, thank you for joining us. For now, goodbye, good luck and good trading.